hope everyone, you're all well, your family and your colleagues are also well in these difficult times. And before we start, I'd like to acknowledge the traditional owners of the land, the Gadigal people of the Eora Nation. Now, what we're going to talk about today is going to the, I'll introduce you to our panel initially. We've got, I'll give a very brief update, and then we'll have Mariana, who's, a lot of you will be interested in hearing about the JobKeeper allowance, what's happening with that and what you have to do. Then we'll have Simon James, who's going to talk about forecasting and the importance of forecasting as well, in especially in these uncertain times. Now, as far as an overall summary is concerned, if you look at what the ACNC have been talking about, ASIC came out last week and talked about, for those entities that are registered with ASIC, the charities are registered with the ACNC, and they've already talked in the past, or they've announced the extension to August about lodging the annual information statement. ASIC, for those registered with ASIC came out last week and they've given an extra month to December year ends to lodge. So instead of the end of April, you've now got till the end of May. They haven't come out and said anything yet about beyond that period, June year ends, etc., but we'll keep you informed on that of anything that changes for that. Now, what I just want to talk about, everyone's obviously with what's going on, it's caused a lot of uncertainty, and a lot of your efforts are focused on what Mariana's going to be talking about and what Simon's going to be talking about. But there's also the day-to-day operations as well, the stuff that you would have been concentrating on had this pandemic not, had it not occurred. So what I just wanted to check with you, touch base with you, with the accounting standards, we talk about that briefly for a moment. There's 3 big accounting standards that are for December year ends, you've already implemented those, but for the June year ends, they're coming for this June, and there's three big ones. There's WSB 15, which is a new revenue standard. There's WSB 1058, which is a new income for not-for-profit standard, and there's WSB 16, the new leases standard. These all apply to the 30th of June year ends. There were some questions that were asked of the ACNC by charities whether extensions could be granted for this. Nothing's been announced, and I would guess the answer to that is going to be no, given that this has been out for a number of years. Everyone knows this is happening. December year ends, etc., have had to implement these already. So I think you just have to, if you're not already prepared, is get ready to implement these standards, because they will be effective for the 30th of June year ends. So what I just wanted to ask is a quick poll question: are you ready for the implementation of these standards? So you've got a poll question that's just appeared on your screen. So it's the 3 new accounting standards, simple yes or no answer. Are you prepared for the implementation of these standards? Because for 30th of June year ends, they're coming up for this reporting period that's fast approaching. So I'll give you all a minute or so to answer that. Okay, thank you all. Now I'm going to pass over to Mariana, who's going to talk. This is a bit of a moving feast. There's new information, legislation, announcements made every day regarding this. So it's pretty much watch this space. So over to Mariana, who's going to give an update on the JobKeeper allowance.
Thank you, Aidan. And welcome everyone. Good morning. This session will be held weekly around this time, so that we can probably give you some feedback or updates. And a lot has happened in the last week, especially this week. This week, we received the rules and explanatory statement. Effectively, those are the rules that give us the detail about what projected turnover was or is, and how you do the calculation. And that is something that everybody is after. Now, you will find this at the treasury.gov.au website. It is sitting under JobKeeper. And if you go down past the fact sheets, down the bottom, you'll see the rules and explanatory statements. Always a good thing for you to have a read of the explanatory statements if you feel like it. And I'm going to go through that today. Now, last week what happened was Wednesday, they passed the legislation on the JobKeeper, but it was mainly the framework and Fair Work Act. So all the stuff about the employees and so on. So there wasn't the detail about how it works. Now, just so you're aware, the ATO has also published how to access the JobKeeper. So details as to what you need to do as an employer and what you need to, or forms that you need to complete for employees. You'll find that in the ATO website under the JobKeeper. And again, we can go through that. So big picture, when does it start? Some of you know this already, but let me just warm you up. Starts on 30th of March and goes to 27th of September, 6 months. The government has put in their legislation that they can cut that short. It just gives them the option. I don't think they will. but just to be aware that it is there. So what is it? It's 13 fortnights they refer to, and each employee receives 1,500 per fortnight from that date. So the first fortnight being 12th of April. So effectively, if you're on this scheme from the beginning, that sounds a JobKeeper payment from the beginning, you'll get 19,500 for each employee. So it's good benefit there over the 6-month period. It's paid once in arrears, so once a month in arrears. So if it refers to April, you get paid, the ATO will make the payment to the employer if you meet the criteria in the first week of May, and then first week of June, first week of July, and so on, so long as you meet the criteria. One thing to note and it'll be made before the 14th of May, around that, before that. They say the first week, but I would say it might take a little bit longer. What's interesting about the JobKeeper is that one thing that was asked is, once you're in, are you in for the rest of the time, or do you have to keep meeting the criteria month to month or quarter to quarter? And the answer to that is, once you're in, you're in. So you don't have to keep testing. Although the ATO is going to require that you provide them information month to month on your revenue. And the reason for that is, I think they're trying to see what the costs of the COVID-19 have been for businesses. So it's more of information gathering, I think, from their end. So who's an eligible employer? Let's dive in. You must be an NFP. So a not-for-profit means pursuing objectives and I'm sorry, let me just state, I'm not covering businesses that are for profit in this session. So it does say businesses for profit and not-for-profits that will be able to be entitled to the JobKeeper. So pursuing objectives principally in Australia at 1 March. So at 1 March, are you carrying on your objectives, meaning your NFP objectives? And to clarify this meaning, there's a GST ruling. Now, a lot of the JobKeeper is based on GST definitions, so hence why I'll be referring to those. Now, interestingly enough, you must have a decline in turnover in order to meet this. So, yep, we're ineligible, we're operating, and we have a decline in turnover. Funny enough that it says that ACNC registered entities, so ACNC registered only, need to demonstrate there's a shortfall of 15% or more. Shortfall of that, a reduction in your income, and I'll get to what projected income is. So what that means is that if you're not registered with the ACNC, but you're a not-for-profit, you still be entitled, but not to the 15%. You'd probably be entitled if your turnover, aggregated turnover is under $1 billion, then it would potentially be 30% or more, or 50% or more if your aggregated turnover is over $1 billion. Now, it also excludes certain charities, ACNC registered entities, from getting the 15% drop. That is private and public universities. How is it defined? Well, it's defined in table A and B of the Higher Education Support Act 2003. So if you're concerned whether you meet that criteria, then you go there. Government schools, or schools defined under the GST Act as preschools, primary, secondary, or special education for disabilities. Now, those organisations are excluded from the 15% reduction, not excluded from JobKeeper. So they can still get JobKeeper under the either 30% or more drop in turnover or 50% or more drop in turnover. Also, when they're assessing this, you might have a GST group. As a not-for-profit organisation, you may have other entities. If you are GST grouped, you need to ignore the GST group and you look at each employer. So each employer within your group, so if you have 3 not-for-profits that are somehow linked, ACNC registered, you look at each employer. So each one that has an ABN or employees. How does the charity measure the fall in turnover, the 15% fall in turnover? So let's just go align with that, but if you don't have 15%, still turnover. You need to show you have suffered a decline in projected turnover. Okay, so we'll get to projected turnover in a month, calendar month, or in a quarter. So that means that for a month it can be, interesting enough, the explanatory statement and the legislation include March 2020 was something which we hadn't anticipated. So it could be March, you look at your March projected turnover, which we'll explain. In 2020, look at your March 2019 projected income. If you've gone down more than 15%, you're in. But first payment still comes in May for April. So you don't get anything for March itself. So you'd be getting $3,000 per employee for the month of April paid in May, the first week of May, and so on. And then you don't have to retest. Now, if you don't meet it for March, you can test in April. And if you don't meet April, you could test the quarter of April, May, June. So it's your choice. You don't have to follow your BAS cycle, which we initially thought might be the case. You can actually choose which one of those. I would do both calculations and just work out which works for me and which doesn't for the organisation. So if, for example, April to June, you meet it, then you'd get the payment from April, May, June, and so on. You don't have to retest the next quarter. So you're comparing month to month or quarter to quarter. So what happens if you need, if you don't have a month? Your charity started later, so it wasn't in existence in March 2019 or that quarter, 1 April. So there will be alternative tests. The Commissioner is still to release it, but again, you have to, basically you can use different criteria. So they've given some examples, not necessarily for charities, and I think more information is to come out on that. But one they sort of, for a startup, they looked at the charities, say their turnover in April, and then they got the average of, say they started in October 2019, October to March, took an average for that month, and then compared it to the month of April. So there's different ways you can do it, the alternative test. The ATO is going to come up with some what's accepted alternative tests for different categories of employers. That means you can't pick and choose whether you use that test, it'll be given to you. But again, if for your own purposes now, you could make your projections based on some reasonable basis. If you don't meet it for, say, a month in May, in April, or May, or June, or that quarter effectively, then you can also you can test in July. So once you meet it, and you can keep testing until you meet it. And if you do meet it, you only get it from that point onwards. So say, for example, you tested it in July and you got it for July, you'd get paid in first week of August, but it doesn't backdate back to April. Okay. So the question we have is, what is projected turnover? And it's given the same definition under the GST Act. So we've gone to the GST Act and looked at what does projected turnover look like. There's a ruling also which talks about projected turnover. There's been modifications made for not-for-profits. So basically, if you recall, when you look at your projected turnover, it normally says you need to have use a reasonable estimate of sales for the month or the quarter. It would be expected the charity be able to substantiate the projected turnover. You can use bona fide business plans, accounting budgets, or other reasonable basis. So a little bit about projections and budgets. What have you already budgeted for the month of April, May, June? Have a look at those in 2020. So the modifications made are for ACSC registered entities, okay? So again, this is only for ACNC registered entities, is donations. So donations can be included as part of your turnover. So if you look at it, donations or anything that's a gift normally doesn't get included in your turnover or your GST return if you're registered for GST. You don't have to be registered for GST, by the way. So if you're a DGR, so you know who you are, you would include your donations received under section 30-15. So 30-15 is basically a table in the Income Tax Assessment Act, and it says if you get money over $2, it's deductible to the donor. Or if it's, say, a bequeathment, or if it's a gift of property, and the value of that property. You either take market value or something else. So there's a whole list there. We can assist with that if an organisation needs it. If you're not a DGR, but an ACMC registered charity, you include the gifts received or likely to receive by monetary donations, if you do receive those, or property of the value of more than 5,000, so market value of more than 5,000, and gifts of listed Australian shares, so the value of those listed Australian shares, that's easy to get from the market. Gifts from associated entities are not included in your turnover, okay? So when we're talking about this, and we've just said, okay, it's basically if you do a BAS, you go to G1, what your sales are. You look at your taxable supplies, your GST-free supplies, you add on donations or gifts in this case for this purpose, and you exclude input tax supplies. So any rent you might receive for a residential property, because they're input tax, there's no GST on them normally, dividends or interest, they are excluded. And when you compare it to last year, you sort of have to adjust last year's as well. So if you take, for example, April, and I've just done this projection as I've talked about, I've said, okay, for April or that quarter, I've received these supplies, you know, fundraising, so on, and I haven't included them as input tax. You know, you can make an election that the input tax, I include those in their taxable supplies, I include my donations, and then I exclude my input tax, I exclude my dividends, etc. Then I go back to April 2019 and I make those adjustments. So like for like comparative. So again, so just to confirm, so the April 2019, I make those adjustments. So I add donations in there as well. Now you'd have all this information in your month-to-month P&L and so on. Okay. The other thing to consider, we're talking to our GXT expert, was whether if you sold a building, a capital asset, does that get included or not? And what he's saying is that if you refer to the provisions, it says that it excludes, when you're looking at GST, you exclude capital assets. So if I was calculating it for April and I'd sold a building, I would exclude that capital asset. Whereas if I go back and sold the building back in 2019, and the comparative might be that in April 2020, I didn't sell a building, and that's fine. But in 2020, I didn't sell a building. 2019, I sold a building. That usually gets included in my GST return. So interestingly enough, but that's something we can discuss further. Or, you know, if there's been some sort of transactions or transfer of assets, whether they get included or excluded is another consideration. But they're pretty special, so we can talk about them on offline. So who's eligible? I hope that explains it. I'm sure there's some questions that we can clarify in the questions and answers, so type away. Employees eligible, they need to get $1,500 a fortnight. So I'm going to talk fortnight, but you know that means $3,000 a month. Now, normally it has to be paid under legislation every fortnight, being the 12th and the 26th, so on. But the Commissioner recognises practically that you might be paying people monthly. So what the monthly amount, so long as it's $3,000 for those employees under receiving less than that normally a month, or an aggregate of 3,000, so it might be 3,250. You still only get $1,500 from the government though. So who gets it? Employee must be, so you've got an eligible employer, now have you got eligible employees? Must be, let me just, my phone's ringing here. Must be employed at 1 March. So if somebody started on, you know, in April, they're probably not entitled. They won't be entitled. Currently employed, if you stood someone down, you can still pay them. You could re-engage someone you made redundant if you feel that you're entitled to the JobKeeper. Full-time, part-time, or casual. Casual's a bit strange one, but they'd have to have been a casual back from 1 March 2019. So that's always an interesting one. And being with you working a regular basis or irregular, whichever way you look at it. It has to be an Australian resident at 1 March. So that looks at it from residency under the social security purposes. So Australian citizen, permanent resident, visa holder, special category visa, which are normally New Zealand residents. And they've got here 491 and 494 visas. So skilled workers, regional, skilled employee sponsor. They don't have any of the other visas in there currently, but that is something that needs to be looked at further. So if you're a student and student visa, you're not entitled. So effectively, if you've got employees that are in, they're all in. You can't choose which employees are in, except those that are not eligible. And they can only be receipt of the JobKeeper from one employer. So the employee needs to nominate who that employer is if they're working for a few not-for-profits. Usually you know because usually they get the tax-free threshold. So you're already applying the tax-free threshold to their salary and wages. That's usually an indicator. But again, there'll be some, forms that need to be filled out, and I'll go through them at the end. How do you get the payment? Go to the ATO website and you register your interest. And then once you've registered your interest, you apply from 20th of April this month, so Monday, you can start applying after you've made your assessment, okay? Assess yourself first. See if you're an eligible employer, your turnover test, and you've got eligible employees. So you can start from Monday registering on the ATO website. Usually they're going to require you to do it through the business portal, but actually tax agents can also assist with that. Payment will start in May, as I've already indicated. If you start later, you can also get payments later. And the payment's made to the employer's bank account. So make sure your bank account details for every employer is correct with the bank, because they'll be making it into there. What must you pay employees? It's an important question. One thing is key here is that you need to have paid your employees in April, so you qualify in April. You need to have paid them in April for you to get the payment in May. If you haven't paid them, then you're not entitled to the payment. Now that means you're going to have to sustain yourself from a cash flow perspective. And some ideas are that the banks will lend you the money using the JobKeeper as guarantee, as a payment, so that they know you're going to get the JobKeeper payment, so you can use the banks. Now, James McFarlane, who works with our debt advisory, can assist you with that. It's a really straightforward process if you go through a debt advisor. It's a lot harder if you try to go to the banks. But if you've already got contacts with the banks, CBA, you're working with them, I'm sure you can ring them and Yvette, and she can help you, or her colleagues. So you'd need to make a minimum of 1,500. So let me give you some scenarios. If you have employees that are getting more than 1,500 a fortnight, so they're getting 2,000 a fortnight, then you just continue paying them, and the JobKeeper is just a supplement, okay, to your cash flow. If you've got some employees that you're paying them 1,000 a fortnight, then what you're going to have to do is pay them 1,500 a fortnight, or 3,000 a month. Now, then the ATO will refund you the 3,000. If you have employees that you've stood down and not paying them, then you have to pay them 1,500 for the month. Fortnight. So 3,000 for the month of April. What does the 1,500 consist of? I was thinking, what does it really consist of? Because with a lot of the not-for-profits, the PBIs and so on, public benevolent institutions, you have this non-cash amount. So, we have the salary cap where we can sometimes pay for people's, groceries or other things, or mortgages as part of that 30,000 cap or 17,000 cap. And those that get it know what I'm talking about. I think the 1,500 forms part of that payment. So 1,500 includes the PAYG withholding. So you normally, if it was just salary, you take PAYG withholding out. Includes any FBT contributions as part of the 1,500, and it includes salary sacrifice super. So I think it would also include the cap on the PBIs. So what might be an example of that? Somebody's getting 3,000. 3,000 might be salary and wages. 1,500 might be salary and wages, and 1,500 might be non-cash benefit. sorry, is it non-cash? Non-salary benefit, so in some other shape or form. So long as it meets the 1,500, all you need to have paid is the 1,500. That's probably not a good example. Another good example might be you pay them salary and wages 1,000, and then you pay their mortgage 500 as part of the cap. Well, then that would count as 1,500. It's not yet clear whether this forms part of payroll tax. The payment itself is normally assessable. Obviously, for not-for-profits, you're not assessed on it. But normally, does it form part of your payroll? Now, if you're exempt from payroll, it doesn't matter. There's also some exemptions available to those that aren't exempt from payroll currently, and you can check out our website. We've got all up-to-date information in our website. It's just HLB, and you go to JobKeeper or stimulus. I think it's COVID-19 stimulus, and we've got a lot of updates in there and for each state. So it's a little bit easier, I think, to look at it from that angle. Now, I just want to do a poll before I wrap up with just actions. And the poll is based on what you know, what I've just informed you about. Do you think you'll be eligible to apply for JobKeeper? Yes, not sure, rules are not clear, maybe, depends on future turnover, or no. So if you could complete that, that'd be fantastic. I'll just give you a minute to think about that. You probably all thought about it already, so it won't take very long. So just moving on to what actions before Simon starts, and yeah, I think we've got plenty of time, so that's good, is make sure that, as I mentioned, you registered your interest already. You probably already have. You'll start getting information from the ATO about actually registering for the JobKeeper, so from 20th of April. Also, you need to send a copy of the employee nomination. There's an employee nomination notice, so you send this copy to employees to complete their name, date of birth, all these kind of things. And you need to keep on your records, and you provide a copy to your tax agent. Also, you will need, there's a whole lot of stuff. Each month, you will also need to reconfirm that your reported eligible employees have not changed with the ATO. So say someone resigns, leaves, whatever reason, you don't keep getting the payment for them, you need to tell the ATO. So you need to report that. And also you do not need to retest, as we've already talked about your turnover, but there will be some information that the ATO will be requiring from you on a monthly basis. And these are all the services that we can assist with. We can assist with completion of your enrolment and application process for businesses, assist with calculating your projected turnover for a month or a quarter, and assist with ascertaining eligibility to the JobKeeper payment. So if you need some assistance, we are here. So now I'll hand it over to Simon.
Thanks, Mariana. That was excellent. I really enjoyed that. It's been a challenge over the last few weeks to kind of keep on top of that, but that was a really good summary. So thank you for that, Mariana. Forecasting. So what is a forecast? At this point in time, it's a critical management tool. The better the information that we get, the better decisions the organisation can make. We've been working with lots of NFPs, principally around looking at how this is going to feed into the JobKeeper allowance and making sure that the revenue drop is there, but also just making sure they've got enough cash to continue to operate and how they can kind of pivot and change their operations. So principally a forecast is a cash flow at this point in time. It's not a profit and loss account. So if your forecast of P&Ls, we need it on a cash basis, please. The ones I've been reviewing over the last couple of weeks are still showing me kind of grant income that's spread beautifully over month by month. That's great. That's how it gets reported in P&L accounts. But from a cash point of view, that doesn't provide any useful information at all. So cash basis, please. And basically what we need to do over the next 6 months is a lot of kind of things going on. So we need 6 months forecast to the best of our abilities is probably where we're going with it. So when you talk about the frequency of a forecast and how often should it be revised, I suggest at this point in time it's impossible for a lot of organisations to predict 6 months with any certainty. So we've been advising that organisations are revising their forecasts every month. Unless you've got lots of surpluses, then you potentially push it out to a quarter. If cash is tight, then I think intra-month forecast and maybe on a week-by-week basis is kind of where you need to get to. And we've been working with a couple of clients recently as donations have dried up very, very quickly. And it's a real challenge now until the funds from JobKeeper start flowing through in May. So timing and the lag of that JobKeeper payments are very important to make sure that they're accurately reflected in the forecast models. How to build one? A lot of clients struggle here, and it's just because of usually a lag in historical data coming through, and it's quite hard to get those kind of lead indicators to look forward. There's kind of lots of tools out there, lots of accounting packages that kind of link through to Excel, and use some kind of really techie people from our modeling team that can really help build those models and put some automation in the process. Can really streamline the process. I know it's really hard for lots of organizations at the moment where you've got the finance team working from home and remotely, and all the operations team potentially not in the same place either. So communication is kind of key around all of that. But just because it's hard, it doesn't mean it's not critical. And if there's ever one time to really get your forecast model operating smoothly, that people know what they need to do in terms of reporting last month's numbers and looking forward 3 to 6 months on a rolling basis. Now is the time to actually put all those processes and procedures in place. We can help there. We've seen best practice. We've got models of how to kind of roll this out, and a lot of it can be automated and to take a lot of pain out from the organization. When you talk about sensitivities, one of the good things about forecast is it's kind of best guess what it looks like forward, but let's have a look at what sensitivities we need to run. So if you think about what the known unknowns are, so these are, we think we might get this grant, or this might happen, or we expect to get this, but we're not sure, especially where there's kind of binaries, yes and no's. This is where forecasts can come into their own. You've got your kind of base case, but then you've got scenario A, scenario B, scenario C, and that can actually help you set out those strategic plans around each of them when milestones or certain events kind of happen, and allows the organization to pivot quickly. So if you've kind of just making sure you're flexing your variable costs against any of those scenarios, and make sure we're on top of those lead indicators is kind of critical to making sure we're running the right sensitivities. Variance analysis I've got on there as a dot point to talk about. Historically, when we use forecasting as a management tool to see how well we've done versus expectation or budget of where we do this, and which is absolutely critical. We still need to do that critical look of how we performed against what we expected, not just to see how we've performed, but also there's lessons learned in this process now about how we reforecast and making sure we get the next rolling forecast better, more accurate, if that's possible. So we're using that analysis of, one, why didn't we do what we thought we were going to do, even though because we only reforecast it fairly recently, therefore we should have a better idea of what it looks like. And if that didn't happen, why not? What are our lead indicators telling us? How can we do things better so our forecasts are on a continuous improvement curve going forward to get better and better? Finally, communication. This is a hard one. Communication up and down and outside the organization to kind of all stakeholders. But I've seen quite a bit of resistance recently working with management teams around boards not liking change. We've set our original budget and we need to do actual versus the original budget that is, I suppose, at least 9 months out of date now from when it was set, and the world's changed significantly since then. So there's a lot of communication and potentially education around what needs to happen and how we actually communicate actual versus reforecast and reforecast on a kind of month-by-month basis. So like I said, we're spending lots of time assisting NFPs with the forecasts, and we are here to help.
Thank you, Simon, for that. It's obviously crucial at this time that we are concentrating on our forecast, make sure the cash flows are up to date and you know where everything is. Now, we've got some Q&A. You'll see at the bottom of the screen, there's a Q&A box where you can type your questions. The ones we've got in there so far, we'll go through. This seminar's due to finish at 10 o'clock, so hopefully we'll get through everything that's asked. And if not, we'll see if we can run a little bit longer, or we can work out another way we can talk to you. Okay, now the first question on here is a question: we're registered with ORIC, that's the Officer of the Registrar of Indigenous Corporations. Could you include their lodge date changes as well as ACNC and ASIC, please? So yes, the ORIC have also come out, and this is extended for December year ends, but an extension till the end of August to lodge with them. And for AGMs, there's rules for companies or entities that have just incorporated and existing entities, but for the existing entities, it's to contact ORIC if you want an extension. It's due at the end of May, the AGM, but if you want an extension to contact ORIC directly. I'll put a link to the ORIC website on here as well, so that you can see where this comes from. Okay, next question. These next few questions are towards you, Mariana. Bequests, are bequests also included as donations?
Yes, I would say they're part of that section 30-12. So usually bequests are gifts, are donations. So they would be included as part of the projected income. Now, the question is, how do you know if something's coming? Sometimes they do tell you these things. So you could be aware of a bequest coming your way.
Yeah, they say often it's the case that you might not be aware of it. The bequest just comes in.
That's right. That's right. But remember, you're doing the projected turnover, GST turnover, based on what you know. So it's a reasonable basis. Did you get bequests in the same comparable month? You know, it's unlikely, you know, so I think it's really whether you really know that you're going to get one or not.
Yep. Next question. Do we have to include donations if we are DGR in the assessment? So we have to use donations, or can we use discretion?
Yes, so it's part of the law that it says it's modified. It doesn't say you have a choice not to include it. It just says that yes, you would modify the rules to include donations. I think that may actually help you to include donations if you're doing it on a monthly or a quarterly assessment. Remember, the rules for projected turnover for charities, there's more to come out. That's what the ATO website does say. So I'm sure we haven't received everything yet, but I think you can start doing the calculations.
Yes. Government grants, are they included in turnover?
Well, I would look at it as, in most cases, is a GST applying to the grants? They're either GST free or GST. I'd say they're taxable supplies in most cases. And you know this because you've been probably including them in your GST return in G1. So they wouldn't be normally input tax supplies. So I would say yes, you'd include your grants.
Okay. Is that a different answer if there was no GST, or if you get some grants?
No, because no GST free is included as well. So that's why I'm saying that in both instances, they'd be included in your calculation.
Yep. Thank you. If an entity has cash reserves in place, does this affect the eligibility to receive the JobKeeper allowance?
No, it's not asset based or anything like that. It's just based on projected turnover.
Okay. If an entity has project staff and projects, and the projects will be completed by the 30th of June, am I required to keep them on as staff to qualify for JobKeeper for my core staff?
So my understanding of the question is that if you have a project and you've hired staff which are already there from 1 March, I would assume, and the project finishes on 30th of June and you don't really need those people anymore, what you could do is, well, it depends where the world is at, but you could do is stand them down and not, and then just pay them the $1,500, which you'll still get reimbursed by the government. Otherwise, if you make them, you know, if you get rid of them, where else are they going to get paid? So you almost act like a bit like a Centrelink for them. Your other staff will still qualify for the normal JobKeeper, even if you, as long as they're in your books, they'll qualify for and you qualify as an employer, they'll qualify for the JobKeeper. Sorry, Aidan, what?
You don't need to actually give them work to do. You just keep them as you employ them, they're not doing anything, but they're still eligible for the 1,500.
Yeah, that's right. So it may be that, you know, they're casuals that you've had for more than 12 months. It could be that they're full-time employees that you contracted them before 1 March. And, you know, you could actually basically not make them redundant, but, you know, at the end of the contract, it could be you say, well, we don't need you anymore. And then they'll have to go to job seeker to get some payment, because I think it'll be difficult to find a job. If they can find another job, well, that's fine. But your other employees still receive it, so there's no issue. Or another way you could think about it is you could have a look and just stand them down, or just say, well, there's no work, so I'm not going to pay you as normally I wouldn't have paid you, but because we've got the JobKeeper, I'll give you the 1,500 every fortnight instead of you having to go to JobKeeper and get it from the government, and we'll give you that money. Okay, the first month is a little bit harder, but then we're not talking here April, we're talking back down in June, July.
Okay,
If
thank
that
you.
answers it.
Yes, and the next question is, it's for you, Mariana. Okay, if they're on a visa, so someone's on a visa but deemed to be a resident for tax, are they still eligible?
It's a residency test under the Social Security Act. So if you were being entitled to Social Security, you'd be a resident. So it's an interesting one. So there's a whole definition on it. I'm not 100% sure. What type of visa would you be talking about? I know that if you're Australian resident, Australian citizen, or a resident of Australia, because you meet the criteria, of 183 days, you should comply. That probably needs a little bit more confirming.
Mariana, I've looked at this one previously for somebody else. It's permanent residents, Australian citizens, and there's one specific subclass, which is pretty much 444. Kiwis. Yeah. Anybody else? No. So I think the question was, if you're a resident for tax purposes, that doesn't matter.
Well, you do say, so it does say, you just said Australian resident, right? So
for tax purposes, the question was.
Yeah, but you have to be an Australian resident under the Social Security.
Correct, absolutely, yeah.
And there's a whole definition of that. How do you find that? If you go to where I've told you where the JobKeeper explanatory statement is, you can go into that and it'll have a link. It's in the Treasury website.
Thank you.
Happy to send it to you.
The next question, so if we're looking at the decline in turnover, can you look at your actual turnover for April 20 and compare that to what you projected, forecast, and if it's less than 15% you qualify, or do you have to compare it to April 19? Yeah,
I think you said more than 15%, is that right? No, you have to, it's pretty clear, the legislation. I mean, look, if you've already had your actual, well, you don't have actual 2020 because we're only on the 16th today, and you have to register by or from the 20th of April. So you won't really have your April figures. So hence why it's really projected. But you might have your March figures. You can use March. So if you think that in March, 2020, you look at your March actual with all those modifications, and then go back to March 2019 with modifications. If you've had 15% or more drop in turnover, then you qualify. Then you don't need to retest.
Okay. Is there any issue regarding employee JobKeeper eligibility for an employee on unpaid leave and receiving a carer's allowance through Centrelink as they look after a child with a disability?
Yeah, that's an interesting one. They're on unpaid leave. Normally what happens is that they're not getting another Centrelink payment to qualify. So normally if they're getting, they're looking after a child and disabilities, the way I would think it would work, I'm not 100% sure, but I think I was just having a look at the nomination notice. There must be something in that nomination notice to indicate, so in the explanatory statement, I should say, and the legislation, it says that you can't get job seeker or some social security plus JobKeeper. So you can't double up. But I'm not exactly sure about that specific carer's allowance. So I'd have to have a look at the JobKeeper nomination notice to see if it says something in that. And that's, you can find in the ATO website when you go down the steps. But in general cases, you shouldn't be getting something already from Services Australia which is Centrelink. Hope that answers the question.
Yeah, and if there's anyone's got any specific questions, Mariana, they can reach out to you anytime to talk to you about them. Okay, the next one. If normally report the ATO, so the BAS returns normally done on a quarterly basis, can you apply for JobKeeper with a drop in revenue for 1 month?
Yeah, you can. You don't have to link your BAS cycle to your calculation for projections. It was thought that you would have to link it, but you don't have to. It's clear in the legislation.
Okay. Now, the decline in turnover test, how does that work for grant income? It's often paid in a lump sum for a full year. Do you need to, is it how it's recognised in the profit and loss account under accounting standards? Does it, whether it's amortised straight line or taken up as it's spent? How does that work?
Yeah, so do you normally amortise it in your accounts?
From accounting standards, yeah. It depends on the accounting standards. Some you have to take to revenue right away, and some, depending on the accounting standards that I was talking about earlier, that you have to spread over a period of time.
Look, it is on projected GST turnover. So when you would include, when you, I guess the question is, if when you get the grant income and it has GST, do you put it in that BAS? I guess that's a question for you guys. That's one way to look at it. Now, if that doesn't, now remember this is based on projected income, not what you actually receive. So if it doesn't make sense to include it all in 1 month, because it doesn't, it relates to 12 months, but you've just received it, say in April, then you can do the projections. So the projections would include it on a monthly basis. So I think that would work quite well, because I think your budgets would actually show it that you're actually getting it on a monthly basis.
Yep. Next question. 3 sub-questions. So about employee eligibility. Number 1, employees on a contract which expires at some date, are they entitled to JobKeeper payment?
Yeah, I mean, were they employed at 1 March? They're full-time employees. If they're employed at 1 March, if they were, started their contract from 1 March, they're full-time, part-time, or even casual from that period. Well, casual can't be, but I would assume that if they're contractors, they'd have some sort of, contractor, I mean salary and wage contracting, not another entity or some sort of company that you're paying. Then they should be entitled to that date. The question is, what do you do after that date? Do you re-employ them and keep them on track? So, because what happens to them after? Remember, 1,500 minimum you're going to get from the government. So if you stood them down, define stood down permanent or temporary. Well, stood down is under the Fair Work Act, was stood down, the definition. I'm not a lawyer, but it doesn't matter whether they're full-time employees or part-time that have been stood down. They could have been even probably casuals, so long as they meet the criteria of having been with you for more than 12 months. Voluntary resignations, not entitled to JobKeeper. I think, yes, if they were employees from 1 March and they resigned, now if you made them redundant, that's different. But if they had a voluntary resignation, you could re-engage them if they have nowhere to go, and then they would be entitled, so long as they had been employees from 1 March. That's an interesting one because it's a voluntary resignation, and they talk about redundancies more than voluntary resignations. But have to consider whether that could come into it if you'd re-employed them. Now, would you do that if they've voluntarily resigned? They may have resigned, couldn't find, the other employer just wasn't going to take them, and they're left on the street. 2 things could happen. They could go and get Job Seeker, which starts around the 28th of April, the payment, or you could re-employ them and maybe they can, and then you can give them JobKeeper. You act as the Centrelink effectively.
Yep, thank you. The next question is regarding the definition of an associated entity in relation to the exclusion of donations from associated entities.
Yeah, the definition of associated entity is quite big, but effectively if you have some connection. So it might be that the same board controls the 3 NFPs, or you might have a subsidiary like a company and it makes a payment or some sort of donation to you, they're associated. So we have sort of set up Charities with a company underneath that's for profit, And some of the ways that you can get the money back up is through a donation or some sort of dividend or some other way. So that'd be an associated entity. Where the board has control over it, somehow they're related. That's the easiest way to explain it.
Okay, thank you. Next one, a foundation that's providing a 4% distribution and also get a substantial annual grant. Do we have to include both, or can we exclude both from the turnover calculation?
Okay, so you had a foundation providing 4% distributions, so donations, I assume that means, and also get a substantial annual grant. Do we include both? Well, I mean, just to clarify, what's the, we have a foundation providing a 4% distribution. Yeah, so that distribution to you, what is that? That's a grant, isn't it? So that's a donation. I think that's the key. Is that classified as a donation, and in fact would be included? And if you're getting an annual grant, that would normally be included as well. As I say, more information is going to come out on this, but that would be my guess on that one.
Okay, thank you. Bequests. Now, bequests are often cash, but sometimes it's shares. Sometimes it's even property that charities receive. So the specific questions for their shares, and I guess,
yeah. So as we say,
properties, do you include them?
Yeah, yeah. So as we said, bequests are gifts. So if you're a DGR and you get it, you would include normally the market value in your assessable. Well, for the purposes of this projection, we include the market value. If bequests are shares, and you're not a DGR, but ACNC, just registered entity, a charity, then I understand you include listed shares, the market value of the listed shares as your projected income, or yeah, so that would be right. And even if it was just a bequest, which is cash, you'd include that again as part of your projected income. Now, you normally don't include that in. There's no GST on those kind of things, but that's the modification.
Yeah, the value of the bequest that you
Yeah.
receive. Okay. So can the ATO take back the 1,500 JobKeeper once the actual turnover shows and it doesn't meet the 15% drop criteria?
Sure, it can. Yes, there's a clause in the legislation which they claw back the 1,500. That's why I say that you have to be eligible. Once you're eligible, so if you're eligible for April, say March or April, and it's probably clear on March if you do March's figures because you've actually received, you know what you actually received. So it's easier for you to say, well, that was what I received and my projections and compare that to March last year. But if you're looking at, say, April and you're projecting that and you get it wrong, then remember, you can always, that's why I say do two tests, do the quarterly test and the monthly test. So you may be that April you didn't meet it, but you did meet it for the quarter. So you will use one or the other as your eligibility.
Okay.
Now, again, I'm not sure whether you've got to report which one you used. I think that's a self-assessment and you keep that on your records. So you can certainly prove it. Because once you meet it, you meet it.
Yeah, this is why it's absolutely critical to get these forecasts right, because if you're expecting to get $19,000 per person paid in, that's a huge amount of money. And if you subsequently have to give it all back because you didn't get your forecast right in the first place, then that's why it's critical. Yeah,
and I think it's also important that there is some anti-avoidance rules there. So if you do something which you purposely manipulate your income, being that you don't make reasonable projections, you do it in a way that you're trying to get that reduction of more than 15% on purpose, and you know when you're doing that, you know when you're not doing that. So when you are doing that, that's likely they'll claw that back and they will get penalties, high penalties and interest. So I don't suggest you do it. If you meet it for April, great. If you don't meet it for April, look at the quarter. If you don't meet it for the quarter, go to May. If you meet it in May, you get it in May. If you meet it in, don't meet it in May, you meet it in June, go forward from there. So that'd be my advice. Sorry, my phone was on.
Thank you. Next one, if forecast turnover is going to reduce by 15%, and then at the last minute, a large bequest comes through, so the turnover doesn't drop by 15%, what do we do then?
Well, again, this is projected, right? So you're not projecting on receiving that in April, but that's why I say do the quarter of April to June. So that'll give you, a backup plan.
Yep.
And again, they will bring out more information on this, because I think they realise, how do you know what donations you're going to get? How do you know what bequest you're going to get? And maybe there is a formula there, like that you do campaigns or things like that, and you normally get this much in April or May, or you have fundraising events and all these kind of things. So roughly when you're getting them, and you compare it to the prior years, you can do a fairly good projection.
Yep. But we'll keep everyone updated with any updates that are provided, and then these weekly seminars that we're doing as well.
Yeah, that's why it's important, these weekly seminars, because there are changes coming through daily, if not more often than that sometimes. So it's important just to keep abreast of it.
Okay. Next question, association annual membership fees. Should they be included in the GST turnover?
Well, it's interesting, because if you're an association, you're probably not an ACNC registered charity. So your drop would have to be 30% or more, or 50% or more. So just be careful of that. And usually these membership fees are taxable. So normally I would say that, whether they're GST free or not, they're normally part of your turnover.
Okay.
That is your turnover anyway, normally.
Yep. Next question. So someone that's going on maternity leave at the end of March is permanent part-time. Are they eligible?
There's an exclusion for if they're getting paid parental leave. So if they're getting paid parental leave, so from the time they start getting paid parental leave, you can't double up. You can't get JobKeeper and paid parental leave.
Okay.
Now, I don't know whether that means, so just if it's government paid parental leave, because that would be coming from your Centrelink or some government department. But if the employer is paying paid parental leave, I think you would be able to, and they're not entitled to the government one, then you should be part of JobKeeper. You should still be able to pay them. But that just needs further research.
Okay. So employers do not continue to pay their employees for each pay period, to confirm that they cease to qualify for the JobKeeper payment?
Well, they have to pay their employees to get it, this JobKeeper, the minimum of $1,500. You don't get it if you don't pay your employees, because what it is, it's a subsidy. It's to subsidise your cash flow. One, subsidise your cash flow, or be like a Centrelink, and to maintain your employees for when we come out of this, you've still got them.
Okay. Yep. So all the money has to go to the employee, even if they're getting paid less than $1,500. No one's taking profit from the $1,500. They can't keep any of that.
No, that's right.
Yep.
That's right. Exactly. So if they resign, and remember, you have obligations on a monthly, if not fortnightly basis, to let the ATO know if you're not paying the employee. Now, usually it's because they've resigned or they're made redundant or something along those lines. But you'll have to notify them if there's any change. You're not paying them.
Now we've reached 10 o'clock. We've got 13 questions left. So what I might do is we'll put a hold on, a stop on any further questions, and we'll try and get through these 13, and then we'll wrap everything up. So the next one are contractors included in assessing JobKeeper?
Not you as a not-for-profit. They may have themselves be able to be entitled to it. So they have to assess themselves as companies. So yes, you don't have to, contractors you don't pay, it's only employees under the normal salary and wage. So they themselves may be entitled. They have to look at it for themselves.
Yep. Projected GST turnover is different from projected revenue in the business forecast, as GST turnover is based on invoicing. Is that right?
Yeah, so but GST turnover doesn't consider whether you're an attributable taxpayer, whether you do cash or accruals basis, and I think that's what you're driving at. It's based on what you think you're going to get. So if you're invoicing, it doesn't matter whether if you're normally invoicing, you're normally doing the work, but you may not have invoiced yet. So your projected income in turnover is what you think you're going to invoice.
Okay.
Okay.
If a staff member's contract finished on, say, 15th of April and we didn't extend the contract, is that staff member still entitled to receive the JobKeeper allowance?
Well, it's not so clear about that because you can reinstate people. So I imagine you could reinstate them. And they'd probably need a bit more work on that one to be really specific.
Yeah.
But they were, sorry, just to say, they were they were an employee on 1 March. That's the main thing to look at.
Yes. So here we've got Charities got 2 ABNs, one domestic, one international, but only hire staff under the domestic ABN. So when calculating turnover, does that mean that we just use the domestic ABN?
I'm not sure what you mean by the question, sorry. So you've got an ABN, so you're an employer. You've got it's a domestic and international employer, but only hire staff under the domestic. Yeah, so it's where you're the employer. If you don't have staff, then you don't get anything.
Yeah. Okay. So regularity of casual employment. So if you've got someone that's a long-standing casual employee, are they still eligible if there's a gap in employment between May 19 and August 19 due to that person finding full-time work elsewhere? So still in the books and then come back on as a regular casual from September. So we've got a gap of a couple of months when they went and got another job.
Yeah, that's quite specific. I think I'd need to look at the regulations on that because it does say they would have had to be with you, a regular employee from 1 March 2019. Yep. So that's really specific.
Yeah, so I think...
I don't think there's an answer for that yet.
Yeah, and this is it. People do have specific questions. They can reach out to you, Mariana, to talk about those. Okay, next one. If we stand people down, but make them redundant when the JobKeeper ends, does the government contrary to the purpose of the JobKeeper, or do they encourage?
I mean, you could stand someone down, but make them redundant later. The thing is, it doesn't really.
This is when JobKeeper ends, yeah.
Yeah, it doesn't really say that you have to. You don't have to keep them forever. The main thing is that you stood them down. You're doing the right thing. You can't pay them. Potentially, as long as you're paying them $1,500, you'll get the JobKeeper for them until the JobKeeper ends.
Yep.
And then you can do whatever you like with your employees.
Yes. Within
the Fair Work Act.
Yep. The next question, government grants. I think we answered that when you answered that one before. Staff currently on maternity leave, unpaid maternity leave, are they an eligible employee?
So as long as they're not getting paid paid maternity leave by the government.
Yep.
So yeah, if they're getting that, you can't double up.
Okay. Next one's for an entity that reports its BAS, its GST on a cash basis. Can you do self-assessment projections on an accrual basis to access JobKeeper, or do you have to use cash because that's what you use?
No, it's not tied back to attribution. So projected income based on projections. So, it might be that you do the job in April, but you don't get the cash till May. You can include that as your projections for April.
Okay.
It's not based on your GST, so, like what cash you receive.
Yes. All right, next one's kind of linked to one before. So it's a lump sum that you receive. So in this case, the not-for-profit includes that in the BAS return and doesn't amortize it. Can you still spread that out on a monthly basis? Because I think the argument of the issue here could be if you report it in a lump sum, then comparing this year to last, there could be an issue.
Yeah, and I just wonder whether does it make a difference if, say, I'd assume that means you received the lump sum in April. What happens? Could you do a calculation on March when you didn't receive a lump sum, and you might meet it that way? Yep. Or would April to June, you might have received the lump sum and it's going to get you disqualified whether you use monthly or quarterly. But what about if you used your March?
Yep. So you can get, as you've mentioned before, you can go back and use the March one. Yeah.
Yeah.
Okay.
So it really goes back on what's your projected turnover and what is, reasonable basis.
Yes.
So there might be opportunities to spread it if you like. That's something to consider further.
Yeah, and that's if you need further help in looking at that thing, you can talk with us and we can help you with that. So it's a not-for-profit with employees with disability, and the not-for-profit each recently received $750 for each of them from Centrelink, which is then to be passed on to the employees. Are they still entitled to JobKeeper allowance? And if they are, do they have to deduct
Yeah, you can get it going forward, but they just have to notify Centrelink or Service Australia that they're on JobKeeper, and hence why I think this nomination form is quite important. I just couldn't. I was trying to access it, but it wasn't letting me access the PDF. But effectively, yes, they might just get it from, if they've got it for April, they might not get the job seeker until the May payment cycle, or the next April payment, depending whether you're fortnightly or monthly payer. Just don't double up.
Thank you. Yes. Just a couple more to go. So if someone qualifies for April, and given donations prior to March, full year turnover is higher than last year. So there's a risk of the benefit having to be repaid. So I guess it's looking at the full year, it might be higher, but you might qualify for the month of April.
So you qualify for April, but given donations prior to March, oh no, it's based on, when you're doing your assessments, based on the month or the quarter, not the year. So once you qualify, as long as it's a reasonable projection, and again, more information will come out on what that looks like and what that means for not-for-profits. So, when we're having this discussion next week, we might have more information, and please ask those questions again, because, it might be a different answer.
Yep. And the last question we've got here, so if the employee has been paid less than the 1,500, can you increase their pay and receive the supplement?
Yeah, so you have to increase their pay. So that's the whole thing about it. So for April, for example, you'd have to pay them $1,500. So if you were to paying them $1,000 a fortnight, you'd have to pay them $1,500. Worked out, as we discussed before, what does $1,500 entail and look like? That's gross salary. And gross salary might be made up of different things. So $1,500 minimum that you have to pay them. So you have to subsidise that out of your own cash flow for the month of April, because the government will repay you. So again, you can get some bank loans. The banks are willing to lend organisations money if they know they're getting the JobKeeper.
All right, thanks, Mariana. That's all the questions. You can now take a breath, have a glass of water.
Thank you.
Thank you all for your participation and all the questions. It's excellent to get those questions. It helps us as well know what kind of help you're looking for. And as we mentioned earlier, we're holding these seminars on a weekly basis. I'd like to thank you all for your attendance, and we'll speak with you soon.